After being overvalued for most of their history, are Cell Tower REITs finally on sale? Watch this video and find out. Hello everybody, this is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, a.k.a. Mr. Valuation. I want to welcome you to this video today where I'm going to look at cell towers. Cell Tower Real Estate Investment Trust, or REITs, have been a really investor favorite since they come into existence, maybe about 8, 10, 12 years ago. But the problem is, from my perspective as a value investor, I've never found them at what I thought were attractive valuations based on funds from operations. But with rising interest rates, cell tower REITs, along with most real estate investment trusts, have actually had, seen some significant drops in valuations or stock prices. And what I'm going to do with this video, I'm going to look at the 3 premier cell tower REITs and help you decide, are any of them a good investment today after being down, or is there only one you should be investing in, and if so, which one? So let's go ahead and get into the video via FastGraphs. What I've got here is I've got a listing, a portfolio, if you will, of the 3 premier cell tower REITs. And if I did them in order of ticker, symbol, you've got American Tower, Crown Castle Inc., and then SBA Communications. And these are all telecom tower REITs. The one with the most debt, 167% of capital, is SBAC. American Tower has 82% debt, and CCI has 76.9% debt to capital. Debt is part of the reality of owning things like real estate investment trusts, because they're buying real estate and they're taking out mortgages to do that. From a dividend yield perspective, which is what I have these in order, Crown Castle offers a 6.27% yield. American Tower Corp offers a 3.46% yield. And then the lowest of all the REITs is SBA Communications. Now, from a standpoint of which is the best investment, if you're looking at estimated future growth, analysts are only predicting really negative growth for CCI, 5.2%, the highest growth of the 3 for American Tower. And this is cash flow growth, operating cash flow growth, or FFO growth. And then SBAC is a 4.9%. So SBAC and American Tower are pretty well, in lockstep. So let's go ahead and let's look at these REITs. Let's start and do it in alphabetical order. Let's start with American Tower. Now, from an FFO point of view, FFO historically has grown 11.5%. Now, including forecast data, if I shorten this to a 7-year graph, which includes 2.5 years of forecast, that growth rate has shrunk to 5%. Growth for the next 2 years is expected to be around 8%. And the price has fallen dramatically. As you can see, the normal price to FFO has been about 25. That's the blue line. Now, it's been periods where it's been a lot higher than that and periods where it's lower than that, as you can see. And right now, we're looking at a price to AFO, blended price to AFO of 18.27. That gives us an FFO yield of 5.47 and a dividend yield of 3.46. So American Tower, for the first time since they've been a public company back in 2012, I shouldn't say for the first time, but for the first time in several years, has actually become what appears to be reasonably priced, and it's approaching what I would call the intrinsic value line. Moving on, if we look at Crown Castle, it's grown FFO at 7.6%. If I shorten the time frame as well, it's only been growing FFO at 4%. It's expected to have negative FFO growth over the next couple of years. But once again, its price has fallen dramatically. And then if I go to the final SBAC, SBA Communications, symbol SBAC, we see the similar thing since it's been a publicly traded REIT. Most of the time it's been trading at a premium FFO. It got reasonably priced back in 2017 and 16, a bit overpriced. And then this year, and with the rises, with the Fed raising interest rates, it's now come down to what appears to be attractive valuation. FFO growth is expected to be 5% next year and 4% for the following year. But I want to show you something very interesting about these REITs. As I was evaluating them, I started looking at different metrics. Now, if you look carefully at the blue line on this graph, if I use EBITDA, the earnings before interest, taxes, depreciation, and amortization, I get an extremely high correlation at around 13.91 times earnings for SBA. It's currently trading slightly below that at 13.19 times EBITDA. And you can now see the fact when it was really overvalued was in the last 3 or 4 years and now has become attractively valued. If I go on in order to Crown Castle Inc., we see a very similar situation where The price to EBITDA correlation has been very high. It was really overvalued during these years and has now become what looks like excessively inexpensive, and it's offering the highest yield of the three. And then finally, if I go to American Tower, you see this really significant correlation at around 15.48 times EBITDA, a 3.46% earnings yield, and a blended price to EBITDA of 12.9 at a discount to its normal 15.48 price to EBITDA. So as I look at these REITs now that have been overvalued for the last several years, they now are starting to look attractive. Now, one of the real problems with REITs have been there's this notion now, and I really find this amusing because the notion is that, when the REITs were expensive, they were on everybody's buy list. They were everybody's favorite. They were every great. If I tried to say anything bad about American Tower, for example, which I do consider one of the best of the three, it was extremely overvalued, and yet people loved it. Now that it's gotten inexpensive, all of a sudden, REITs are dinosaurs. Well, I'm going to put links to these in the bottom of this video here, but there's 4 different articles that I want you to look at, because the discussion is now that REITs are cheap, that they're going away. And for example, if you go to this website here, what's called Tower Genius, and they're saying if you're wondering if cell phone towers are going away or if cell towers are here to stay, the answer is no. Cell towers are not going away anytime soon. And yes, cell towers are here to stay for the most part. You get a similar report with Airwave Advisors. These are research links that I'm going to give you later in the video. Vertical Consultant says the future of cell towers follow the money. 2 years ago, Crown Castle signed the rights to 9,700 cell towers for $4.85 billion. And so the question is, would these big cell tower REITs be spending billions of dollars if they thought REITs or cell towers were going away? And then finally, Vertical Consultants here produces a graphic giving you all the information, the details about how cell towers exist. Now, they're talking about, people like Elon Musk and Amazon and the rest of them putting up these low satellites, even these low-level orbit satellites. But the real reality of it is we're still going to need cell towers. 5G hasn't destroyed them. But I think the real point is let's look at now whether we can make any money buying these now, because their growth rates have definitely slowed down. That's clear. So if I'm going to use my EBITDA metric here because I find it to be the most interesting. If I look at American Tower and I simply point out to here, if American Tower does grow EBITDA by 7% this year, only 2% next year, and 4% the following year, 4.5%, then if it trades at its normal price to EBITDA of 15.48, we would have an 18.36% return. If I go to American Tower and look at it from a standpoint of FFO rather than EBITDA, or the operating cash flow metric, and I go to forecasting calculators and I use the normal multiple that it trades at 24, it would generate, a very high rate of return of over 24%. Now, going back to the EBITDA, if I went then to Crown Castle and looked at the price to EBITDA, because of the flat line of growth, we're only expecting 6% growth for this fiscal year ending in December, followed by negative growth in 2024 and 2025. But because of the undervaluation, that would give us an opportunity to earn 19.86% and a 6.27% earnings yield. Now, most of the return is not going to come from growth. It's going to come from the price to EBITDA ratio rising back to a more normal 14 from its current 10. So that would be price to EBITDA expansion and a 6.2% dividend yield that's expected to be growing very modestly over the next couple of years. And then finally, if I go to SBAC Communications, it offers maybe some of the faster growth, second fastest growth on the deal, but it offers the lowest future rate of return because its valuation is not quite as sound. So the bottom line, if it was me and I was going to be investing in any of these REITs, I would probably choose American Tower. I think it's a kind of a blend of the two. It's got a moderate yield of 3.46%. It's a BBB minus company. It has the most reasonable debt of the three, and I do think it has very strong potential going forward. So anyway, this has been Chuck Carnevale, a.k.a. Mr. Valuation, showing you cell tower REITs. I think they still do have a future. 5G isn't eliminating them, but they're going to basically support them. I do think there are other technologies that are liable to come along that could be a risk to cell towers, but I don't see that happening in many years to come. I think the bottom line is, price is what you pay, value is what you get. This is the first time since I've been following these REITs that you can buy them at what appears to be a very reasonable valuation. They have more modest growth than they have historically, but because of the valuation and the dividend income, they look attractive to me here. Now, the point is, this may not be the very bottom for these guys. I really don't know. They are still under pressure, so you might want to watch them for a while. And if you see them beginning to recover in value, that's when you might want to invest. But the point is, they're a lot more interesting today than they were just even a year or two ago. Hope you enjoyed this video. If you did, give me a like, subscribe to the channel, and, take a look at subscribing to Fast Graphs as well. What a great tool to help you make better investment decisions long term. Thanks for watching, and we'll talk to you again real soon.